Now, leverage is a feature of every bull. So this is, again, none of this is abnormal, but notice here that we're basically at all-time high in terms of, let's take futures open interest and options, glue them together. So total open interest, and then let's compare that to the Bitcoin market cap, because that's a relative game. How big is the OI position in the market by and large relative to Bitcoin? Now, you could say that this is really the most levered we've ever been, right? Now, it's a little bit funky back here in 2022 because you've got FTX blowing up, and it might be a little bit weird to compare to back here. We can definitely compare to this blow-off peak that we had in late 24. The market's kind of levered up. And you can see here that it's growing in terms of futures. So futures are definitely a big component of it. Options, not so much. We're getting a lot more of the growth coming from futures at the moment, which again, more degenerate traders and gamblers in futures. But this uptrend is pretty clear. It's been going since 2024 and really upticking since April, May, June. Really got some momentum here. And this is priced in BTC terms too. So, it's all relative and it's comparing to the price. So we do have more leverage in the system. We are going to get more volatility. These are the kind of things that likely give us those swings down to go up. Sometimes you got to wipe out some long side leverage. And really the question becomes, which side is it on? And we went back a couple of reports right before we rallied to 125. And as we looked at funding rates, we said, funding rates are really, really low. Funding rates being low and open interest being high, the deduction was there's a lot of shorts out there. And we teleported right to 120. Now, I've talked about this before, but it's been a little while. Let me just refresh what this is. So when we look at funding rates, there is no that's too high, that's too small, that's this. There's not really like a clean threshold here. It's very much its relative game. Now, in absolute terms, this is just the funding rate, and I like to annualize it because no one wants to talk about 0.000125 over an 8-hour period. No one cares about that. Right now, funding rates are about 13%. So not the extremes. Like back here in 2024, we were getting 40 to 45% plus annualized interest rates. And you got to remember, the way to think about funding rates, if someone's willing to pay 55% annualized to be levered long, they might be a bit bullish. They might be just a little bit too bullish. It also means that shorts now have an incentive, market makers have an incentive to literally bring the futures market down to take the other side of the trade and start bringing in short side liquidity. So you got to be aware that the higher funding rates go, the more speculation. It's just a really nice example of excess in the market. Now, funding rates, by the way, they tend to be positive. Most exchanges have like a default positive value. So if there's not really any bias in the market, it tends to default positive. But what I've done here is I've corrected those. So to give it a bit more of like an MVRV or a SOPA type oscillator behavior, I've essentially subtracted what the long-running median. I've used a median for this. What the long-running median is. I think I use a 1-year window. So what we can now see is relative to itself, to its own like normal behavior, where are we? And we can see we're now in a positive regime. So we do have positive interest rates. So we are net bullish. We were net bearish during this correction and we popped higher. So we are net bullish now. And really it's the most bullish we've been since November 2024. So bull cycle type stuff. But here's an insight that I think is really quite effective. Now, we've got more open interest. So what I'm trying to explain here is this is like a credit cycle for Bitcoin. If you go early in a business cycle, there's not much debt. You've had a recession. There's not much debt left in the system. Interest rates might be lower, right? It's probably too in the weeds. The point is you've got a low amount of debt. So you can actually carry high interest rates. So we saw back there's like 55%, but remember open interest is much lower. So you've got a small pool of debt, but a much higher interest rate. The green line here is the total dollars, the interest cost per day. Notice that we're at a very, very similar level. So even though we're not at 40, 50% interest rates, we're at 8% interest rates. Our total interest cost is comparable to both of these peaks because we have more debt. So there is less open interest back here, but a much higher interest rate. There is way more open interest over here, but a much smaller interest rate. But when you net them out, you actually end up with the same interest cost. Now, what happens to a highly levered market when you have a rate hike? Anyone want to talk about 2022 again? Now, this is not saying that we're going into a bear market at any point in time, but I really do want to highlight how quickly we had negative funding rates on the 27th of June. It's the 24th of July. So in less than a month, we have gone from bearish, we're going up forever, to we've gone up, we're at 120K. We're probably going to go up again, but people are going to lever this thing. If we go down to go up, liquidations are surely going to be a component, and they are most likely going to be to the downside. So be very, very aware of that. We are in that kind of market. Things can accelerate very, very quickly. Leverage is a big part of this system. Just be aware of it.